Hey, sometimes I've got a seller that comes to me and says, look, this is the price that we need from this sale, okay? They come to me and say, this is what's outstanding to the bank. If we sell it any lower, if we don't sell this, it's really not worth it. So this is the price we need. Let me ask you, if you were in the shoes of a buyer, would you pay what the seller needs or wants? Or would you as a buyer pay what you believe is the property worth? Simple answer is you're going to pay what the property is worth. You're not going to pay what the seller wants. Same applies when the shoe's on the other foot, right? All buyers, when they're looking at your property, they're going to pay you what they think it's worth. They're not going to pay you what you want. Let me ask you, have you or any of your friends sold a stock or a share on the stock exchange, or maybe you've seen a movie about the stock market? When you're looking to sell a stock or a share, what do? You go and look at the last transaction price of the same share and what it's traded at. That's pretty much what it's about. Doesn't matter what you bought it at, it's what's the current market trading price. If you bought it at a high price, if the price today is lower, you're going to have to sell it at a lower price if you need the cash and you want to exit, right? If you bought it at a lower price, but it's at a high price today, hey, good for you. But let's assume that you bought it at a high price, it's at a lower price today. Do you have a choice but to sell it at the lower price? No. Why? Because that stock or share probably is a commodity. Real estate is pretty much a commodity with very few exceptions. Nobody's going to pay you what you want or what you need. People are going to pay what the market tells them that the property is worth. Makes sense, right? Play with me, man. Work with me.